Welcome back to Fast Money. A very, very special show for you tonight as we dissect a historic move by the Dow, the biggest single-day point drop in the Dow's history, more than 900 points before rebounding on the day. And of course, what also dropped precipitously, or rose actually, I should say, is the VIX, the opposite, before also recovering.
Yeah, I mean, everybody calls it the fear index. Call it whatever you want, but up to 38%, actually getting up over 40%, and then pulling back late in the day, as John pointed out. I mean, there is a level of fear out there. We've been talking about the building over the last 10 days, and suddenly 22.5, which had actually been a very high point. We've been trading underneath 20 for quite a while. Now, actually, once we've gotten above 20, we've accelerated to the upside. I would expect to see the volatility now maintain somewhere above 25 and maybe even test those 40 levels over the next couple of days, particularly if you two gentlemen are right and we see another whoosh to the downside as you're talking about.
I sent you an email yesterday morning, Pete. I said that was an unbelievable call. Pete told you last week, if you own stocks and you don't buy the VIX, you're absolutely crazy. There was an opportunity to be long stocks and buy the VIX as a hedge protection. You called it. You nailed that. Couldn't have been a better call.
Well, it's nice of you to say, but I once again want to bring it back to the stops. I mean, the more I hear about this stops, it makes me just pound the table and say, this is why you got to understand all about options, folks. It's not that complicated. It's an insurance policy. When you own that put, that is your stop on the downside, and that triggers whenever it's dropped well below.
So even if the premium in the put looks expensive, you're saying just forget about it because you at least avoid the idea of getting stopped out.
And particularly, we've been pounding the table on that volatility. The fact that we've been 16 to 18, I mean, that's, you know, over the last couple of years, that is an extremely low level. We were even below 15 at one point. So volatility at those levels, extremely cheap. Now, different story altogether. And now I think you've got to really analyze each stock individually because you've got to find out where that volatility is. I can tell you, it's in a lot of the various areas, the S&P financials particularly.
Okay, let's move on here.